And what sort of tone do you think the Fed will strike? Because we only have a statement to chew on, don't they? Is there any economic rationale for the Fed to pause, first of all?
We don't think so at this stage, Sri. The Fed are very positive about the US economy. I think in Powell's last press conference, and of course this one's not going to follow with a press conference, just a statement, he was very positive on the US economy. Having said that, we'll be looking at the statement closely to see if there's any change and any indication that they are considering the impact of the tariff war going forward. But at this stage, we're very confident that the Fed will say the US economy is in good shape and they'll be looking at the dot plot pretty much consistent with what we've seen.
And directionally, Toby, where do you think the US dollar is heading? Because that, together with the higher rates environment, increasingly is going to determine the fate of many emerging markets.
Yeah, spot on, Sri. Emerging markets is really a US dollar story in the short term, and at the moment you would suggest the US dollar still looks pretty strong. Unless the Fed, of course, change direction or show that they're tempering somewhat, we would expect the US dollar to still look pretty good overall. So we're still on the high side, which means emerging markets will be under a little bit of pressure, but broadly speaking, they're in reasonable shape from an economic perspective.
And how do we approach China, Toby? Do we increasingly have to look at the Chinese markets through the perspective of the currency? And if so, is a further weakness in store? And does that create outflow risk?
Well, I think we've already seen a little bit of it, to be honest, but not significant enough. And in fact, if you have a look at the movement in the depreciation of the yuan versus the impact of the tariff, it's about a net square at this stage. So it really comes down to the escalation. When we talk about China and we look at China, we always talk about mobility and the way in which the Chinese authorities can manage the deleveraging in the economy at the same time of not impacting growth and causing any crisis in amongst the credit sector. So there's a lot of factors at work. They have a lot of controls on a lot of levers, the authorities, and they're doing a pretty good job. But the tariff scenario is just sort of like an exogenous shock that needs to be assessed and need to be considered. So we're watching it closely, but overall we're still on the hunt that they'll 6% growth. Deleveraging may slow down a little bit to allow for some fiscal stimulus to keep the economy and the credit markets liquid. But overall, it's definitely something we're watching closely.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.